Welcome plus traders. In this second module Forex beginners course, we are going to look at identifying key support and resistance. So in this module we are going to learn what is support and resistance. We're also going to learn how to identify support and resistance, and you're going to learn also how to trade support and resistance. Okay, but before we jump right into the lessons, I want you to subscribe to this channel. So hit the red subscribe button, click the notification bell too, so you don't miss any of our video updates. What is support and resistance? Support and resistance are key turning points in the market which are formed by price swinging high and low. Support is also referred to as demand zone. These are areas where forces of the buyers meet and traders look for buying opportunities at these price zones. Resistance is also referred to as supply zone. These are areas where forces of sellers meet and traders look for selling opportunities at these price zones. So this is the theoretical definition of support and resistance. I don't want to talk too much. I just want to go straight to the point, so you need to pay attention to the details in this recording, in this webinar, so you can know exactly what we mean by support and resistance. Though I like calling them key turning points because there are so many controversies. Some traders say there's nothing like support and resistance, some say we only have demand and supply zone, but whatever the case is, let's just call it key turning zone. So that's why I call it key turning zones or levels. So this is how you identify a support level. Support levels are key turning zones or key turning levels which are below the current market price or the CMP. So if you look at this chart now, this is a CMP, the red dotted line here, so that is the CMP, otherwise called the current market price. So any key turning point below this CMP, these are support levels. So you can see we plotted three lines here. This is the first one, this is the second one, and this is the third one. We say the support are key turning point, like price swinging high and lows. So this is a swing high here, this is a swing high here, these are swing lows. So all these turning points like this are support and resistance level. Now when you are plotting your support level, you have to make sure that the price you want to draw your support has at least 3 touches on your support. Like this, if you look at this chart very well, this first line here had at least 3 touches. This is the first one identified here, this is the second one here, and this is the third one here. The second horizontal level too is the same thing. This is the first touch here, this is the second one here, this is the third, and even the fifth touch too. On the third line, you also have price touching that same level 3 times, 1, 2, and you can classify this as the third one. So you notice how the price keeps touching these price levels over and over again. So price has to touch your levels, your key turning levels, at least 3 times, minimum of 3 times, before you can say, okay, fine, this is a key turning point. So whenever price reaches your support zone, you look for buying opportunities. Like if you should look at this point, at this level here, price works on a downtrend and approaches this level. So this level now acted as support zone. So you see buying opportunities, price pushed up, that was a buying opportunity, price pushed up, that is a buying opportunity before we had the rally here. So you look at these key turning points on the higher time frames. So if you want to spot a good key turning point, you have to look out for them on the higher time frames. So let's look at how we can identify key resistance. Resistance levels are price level which are above the current market price. Remember, I said the current market price, it's also called CMP. So I will be using the word the term CMP more often on this throughout this course for convenience. So I will be using the word CMP. So when I say CMP, just know I'm talking about current market price. So on this chart here, our current market price is this green line here. If you observe, there's a green line here. So this is a CMP. This is the current market price. Any price turning point, like a swing high or low above the CMP, the current market price, is a resistance level. So this is a swing high here. This was a swing high here. There was a swing low here. There was a swing high here. So when you are plotting your resistance, you consider all those swing highs and low. Like you can see on my chart too, they have at least 3 touches, or sometimes some more than 3 touches. So like this first one here, you see I have the first touch here, this is the second touch, and also this is the third touch. On the second horizontal line here, that is the resistance level, we have 1, 2, 3, 4, and this last one over here we have 1, 2, 3. Though all this is also can be classified as one touch over there. So resistance levels are key turning points, price turning point on a swing high or low that is above the current market price. So whenever price pushes up and reach your resistance levels, you look for selling opportunities. And to identify these key turning points, you need to do them on the higher time frame. And also I need you to understand that anytime price breaks through your resistance level and retest again, it turns that resistance level to a support level. Now I want you to get this up straight first. Support is always below, support levels are always below, like the base, and resistance levels are above, which is like the, let's say, the ceiling. The ceiling is the resistance level, the support is the base, which is the ground floor. So once price hits breaks through your resistance level and make a retest, that's resistance level now has turned to a support level. So that is what we are having now on this chart. Now you see, before now this line, this red line here, was a resistance level. So as price broke above it and retested, this is called a retest. Anytime price goes back to touch a certain price level or zone, that is called a retest. So in this chart here, you see price pushed up, broke, closed above the resistance, came back down and touched that same level again. So that is where we have the retest. That is the first retest. So once price do this, the zone have changed from resistance to support, because the level is now below the CMP. Remember, we said any level below CMP, that is current market price, is support, and above CMP is resistance. So once price breaks through and retest and continue pushing up, that level now, that turning point now, is support, is no more resistance. You need to have this at the back of your mind, that anytime price breaks through a resistance and to retest it, it is a support. The same thing goes to if price will break through a support level and retest it, it turns to resistance. I hope that is clear. These are few things you need to do to draw a good support and resistance. First, you need to draw this support and resistance at the higher time frames, on the daily, weekly, or monthly. But me, I prefer doing my support and resistance on the weekly. because these are key price levels. These will be levels where immediately price reaches there, we may see reversal, like price turning around. And you have to see your price, and you have to see your support and resistance as zones, not price levels. Like let's make an example. Like if you see on this chart now, I'm just having one line, but you don't need to see as support and resistance as just being this price level, just a line. You need to be like a zone, so you can classify the whole of this level here. Maybe like this one, you can classify the whole of this level here as your support zone. So don't see your support and resistance as price level, but rather see them as zones. Include as many touches as possible. Let your key levels have so many touches, like maybe more than 3, but a minimum of 3. Your key level should not be that close. Give a gap of at least 200 pips between each level. You know, you draw one here and the next one should be above at least 200 pips. Don't draw too many levels. I see traders draw so many levels on their chart. It's not nice. If you cloud your chart with support and resistance level, how will you see the chart to trade? How will you see a clear price action? So don't draw too many levels. Keep it simple. Reduce the number of levels. Then also focus on the key levels. You know, the ones on the higher time frames. Don't bother about trading the support and resistance on the lower time frame. Now, how you trade support and resistance is very simple. You need to allow price to settle in the key zone, like you come and approach your support or resistance zones. Well, then when it's at the resistance zones or support zones, you look out for price rejections at these zones. Price rejections, example, you look out for the bullish hammer or bearish hammer or engulfing candles. So you look out for these price rejections at these zones. Take a trade when you spot impulse or reversals candlestick formation from this zone. So when you see impulsive moves, let's say price is at support and you see a bullish impulse from that support zone, okay, that is a good sign that you should be looking for. You should start taking a buy trade. So you place your stop loss at least 50 pips away from the recent price zone. So let's say price is already at support and you are taking a trade. You see an impulse, you identify an impulse, a bullish impulse from there, and you take a trade. Let your stop loss be below, away from that key zone, you know, 50 pips away from that key zone. So this is to prevent in case price wants to, you know, retest that particular zone and your trade is, you are still safe. Price will not take you out. So reference your take profit at the next price key zone. You have to reference your take profit at the next price key zone. Now this is what I'm saying. Let's say this is a resistance here. You price is at resistance and you take a trade from here. Your stop loss will be above here like this. This will be your stop loss and your take profit will be at this next key zone here. You know, this is where your take profit will now be. Your take profit will now be here at the next key zone. So the same thing is applicable to support. Let's say you are buying from here. This will be your SL will be below this support zone and your take profit will be at this next key zone here. Support, your take profit will be there at the next key zone there. So that is how you trade the support, your support and resistance. So I have few quizzes for you here. First, I want you to tell me what is supply and demand. 2, tell me which time frame is the best to draw your support and resistance zones or levels. And 3, identify key levels on GBP JPY charts. These are few quiz for you. This quiz is good. Attempt it. Comment the answer on this video, and also if this video was helpful for you, give me a thumbs up. If it was not helpful for you, give me a thumbs down so I will know what to do next. And if you want to learn more about price action, you want to really understand what price action is, you want to learn more about it, there is a link below this video. Kindly click on this link and from there you can get access to the price action course and you get to learn more about price action. Thank you for your time. Follow us on social media, A+ Trading Hub. Follow us on Facebook, Instagram, Twitter, and don't forget to subscribe to this channel, A+ Trading Hub, and click on the notification bell so you don't miss any of our updates. Want to talk to me one-on-one? You can contact me on WhatsApp at 0703 933 5695. Thank you. I believe this video was helpful for you, so subscribe to the YouTube channel.